We've just seen a TD10 reading happening here on stock markets around the world. And of course, it's led by the Qs and technology. Nvidia is in a massive gamma squeeze, as are a few other stocks. And with things like Google and Amazon reaching our targets over the last 24 hours, we've got a lot to discuss. The question now becomes, what is going to happen next? Will we see a switch in the breadth showing us that the markets are really in full rotation? Or are tech going to go bad? Well, let's take a look at the options together right now, because we've seen a lot of squeeze in the last 24 hours. We also know trillions of dollars expire tomorrow, and we're quite far away from where technically the max pain is. Well, welcome back everyone to The Daily Show, where we talk about markets around the world. We'll start off here with some charts, because I think charts and options really are the most important part of what's happened over the last 24 hours and what is most likely going to occur over the next 24 hours. We also have the Fed Chair Powell coming out to tell us what's going on. So first up, the skew. This is one of the four reasons that we're looking at markets, and we're using this as a bit of a contrarian indicator. Basically, the skew can show us black swans are coming or people are concerned about that. In recent videos, we talked about the Dow Transportation Index and the Dow itself being down for 5 days straight, and that only happened two other times. And in both of those times, we saw a squeeze on the market. One that was 9% in 2020 before the big fall, and the other one that was about 2.6% before the big fall in 2011. Well, it's interesting that we find ourselves here at a squeeze event again, but we can't actually be sure that it's over until we see skew actually turn around. That is one of the reasons that we'd be looking for. We saw it back in April of 2022. We saw it in August of 2022. We saw compression and the skew getting crushed. We will be watching this over the next couple of days. So let's talk about this. It is the NASDAQ breaching all of these highs. And of course, people will not be happy about this one unless you're on the right side. Stocks like Google hit critical highs over the last 24 hours. In fact, they hit our targets. And Amazon is well on the way. You're talking about a matter of dollars, if not already hitting into a trim level. There were some that were behind, but it was the day of semiconductors. Basically, Nvidia rallied the market super heavily and went into a full-on squeeze. PLTR also went onto a full-on squeeze, which has been rumbling for a couple of days now. And we're bringing in something new to this show, which will be following unusual options volume. So you guys can actually see how we can use that along with technical analysis to make better decisions. So for now, we've got a TD10, a pretty rare event. Basically, the sequential is looking very, very bullish here on the weekly, but these are things that put in tops. If we got to a TD13, then we'd be in serious trouble. That would basically usually mark the top of a market. You can see here the run that's been going on the NASDAQ, and I've certainly cautioned the NASDAQ since we breached through this zone here. It's just been, unfortunately, bullish up until this area, and now we're breaking out to unknown quantities of where it could go next. I have a suspicion that we're seeing what we call a blow-off top, and I've seen it plenty of times before, but calling it before it occurs is difficult. Let's have a look at some of the other things that we've seen. Of course, we've had a weakness here in high-yield junk bonds. They're totally disagreeing with the market. These differentials can stay for a while, though usually the bonds market will be correct over the middle term. And I think it brings up a big point. If you're trying to trade this market right now on the short side with futures or CFDs, incredibly difficult. Obviously, I mentioned this a few weeks ago. I am kind of bearish here in the mid into August and September in the S&P. 4150 was a strike that I took. Obviously, I've taken lower strikes, but it's based on puts. And I've gone for a 4-month and 6-month kind of variable there with spreads. Now, it's all about ratio. It's all about having the time. But if you take a look here, this S&P versus HYG, you can see they're getting very, very big in terms of the differential. Not much action on junk bonds over the last 24 hours while the S&P broke to a new high. Is it a Wyckoff UTAD? Well, we'll find out. And of course, we don't want to predict that one at this stage. It's always been nimble. It's always been fast in this trade range. And trying to short the S&P here is still going to be tough until we see that turn, as it could actually really breach out and go 4,300, 4,350 if we see another strong day on Friday. Let's talk about copper. Copper continues to be weak and it continues to hold up in this zone. Demand destruction's well in play. The two types of markets. We mentioned yesterday silver and gold. They were getting crushed over the last 24 hours in comparison to everything else. Then, of course, we've had metals, energy. They've been the best shorts, along with regional banks up until recently when we believed they were in a squeeze, which has continued over the last 24 hours. Let's have a look now at bonds markets. Bonds markets have made some recovery. This is corp bonds. So basically, corp bonds, inflation adjusted, made a new low. Usually, it's not a great sign that the market is going up and corp bonds are going down, but it's a middle term sign. It's not an instant thing. It's more of a movement. What about the whole central bank liquidity? Here we have the Fed. Here we have the central banks of the world in the purple line. And you can see the Fed's actually still injecting, even though they're claiming they're not. And they have been injecting over the last week. We've seen it go up. It could explain part of the reason why we're doing this, but I would say this is just to really freak people out and to push a huge gamma squeeze narrative that's unfortunately no doubt crushing many people out there. Let's move over here to the move versus the VIX. Now, this is a big differential. Again, the bond market volatility continues to be at that 94th percentile. And of course, Wall Street continued to be hedged into the debt ceiling and other problems out there. We're also getting another reading going on at the moment, which is strong dollar, which is this yellow-orange line up here, and then versus the S&P. So the dollar's going up and the S&P are going up. Now, we've seen some other signs of this in the past, but in general, when we see a big increase in the dollar, I've just kind of marked a few out here. Here's the big increase in the dollar. Obviously, you can see the increase. You can see where it started, what happened, and there is some correlation between strong dollar leading into weakness in markets. But again, timing is everything. We need to see the signs of turnaround. Very interested in what happens over the next 24 hours with Jerome Powell and others coming out. So let's take a look at the biggest options flow over the last 24 hours. And it was actually the biggest option amount was going through the SPY. Then we saw a huge amount of movement here in things like NVIDIA. Look at the total volume. It's 2.34 times the 90-day average, and it was a call attack. 1 million plus units of call volume going through. Obviously, that is creating a huge squeeze event, and we're seeing it, play out with that 5% day. It's not the first day that NVIDIA has shown big percentages, but this is something we will be following here, so you can check it out. 1.46 times the relative 90-day average in terms of Qs. Again, we're seeing an interesting point here. More puts injected into the market than calls. Yet, of course, because of the individual stocks underneath, you can see almost every one of them was in a full squeeze. Some notables that I've taken out of this was Palantir. This has been unusual now for a few days, and you could have seen it, of course, in options if you've been following it. Again, we'll make sure that we follow it here on the channel, but that's 7.18 times the average 90-day volume, and you can see the ratio here. Amount of calls going through versus puts is just obscene. So there could be still a little bit more on the top of those, though really with Palantir's move of being 14.5% off the back of many good days, that's a bit much. Amazon and a few others like Google are some of our favorites at the moment. They've continued to have unusually high volumes, but both Amazon and Google, they're starting to come back down to their 90-day averages. Still outweighed in calls. We're looking for the puts to come back in pretty hard here, and we just have not seen it just yet. So everything's in kind of a squeeze until it turns. TD10, though, is a big deal. Now, what else are we seeing which could be actually positive towards bears if you're in the market? 56% calls. This is up from 52% and up in general. Calls are outweighing puts in a pretty big way, and you can see the total options volume over the last 24 hours was massive. It happens like this into OPEX. Of course, we thought that maybe we might see some weakness in the SPY, some strength in the Qs. That may not make sense, but that's what we thought we might see in the last 24 hours. And we just got basically strength in both. So now with Jerome Powell speaking today, will he turn it around? Take a look at retail trade percentages as well. You can see here single leg by trader type has really increased. Retail is 31%, small 17%, professional institutional. This was led. There's a lot of retailers in these particular moves, buying calls in a big way. Again, one of those things that you've got to look at and say, oh, okay, interesting. When we go over to some of the biggest options volumes across the board, you can see them all here as well, just a different source. And you can see some of the big reads in the put-call ratios, which are interesting. We've still got Tesla as a very interesting one being out in front. This is not an unusual amount, though, for it to be traded. And Tesla had a bit more lackluster. In terms of the notable options that are coming out at this stage, there are not any incredible notables. You can see all these expirations over the next 24 hours though. Look at these PLTR puts. And I noticed that here in the volume, the 3 highest positions are actually all puts for the 19th. Interesting. All puts, big volumes coming in here, all the strikes that you can see. And obviously they're looking towards, no doubt, closing out on the day. But yeah, a lot of ODTE action. And this really shows you with these expiry dates that there's not too much large long-term stuff that's coming through here over the last 24 hours. It's all short-term. And yeah, something to be noted in these markets. We'll continue to do that as we move forward. So with the gamma squeeze on and markets continuing to really rip some of these stocks, what about the expectations of yields? Well, the Fed is still expected to potentially raise rates. Again, it's kind of counterintuitive, isn't it? Markets are getting absolutely ripped, yet the Fed is now 33% expected to realistically raise rates. That's up from 10%, according to economists, only a week ago. Are they wrong? Are they starting to get right and the market getting with it? Very interesting. I want to remind just again with silver seasonality, different markets, obviously, this is the ones that we're focusing on at the moment, the metals, the energy, the currencies such as, gold. And the way that currencies or hedges, some people say, I say it's a currency. And we're going into a period of weakness. And again, we did share some pretty big stats recently that showed that demand destruction was underway in the markets. You can see here only 31% of the time was silver positive after the next 2 months. There's some pretty big stats. I just want to reiterate that again. Now, during these times, there's no doubt it's really hard. If you've missed out or you feel like you've missed out, this is the time where we have to find, is there a rotation in the back end of the market? You might say, well, I missed tech, but there'll be others. Think back to 2020. Let's say we are in a new bull market. We should see breadth start to flow out of these big concentrated tech stocks and rotate into others. Otherwise, it is nothing but probably a false rally. And that's the big issue that you've got right now. You do need breadth switch. And I also want to remind people that there are some very cheap stocks still in the market, heavily depressed. And this is the tale of 2 or 3 markets right now. Ford PE is probably sitting around 19.5 at this stage. I will update it in the weekend video. And I just want to remember that 25-year average is 16.8. Investors, the hardest thing ever to do is to be patient and wait for right mounts. If you were patient and waited, sometimes, throughout 2022, you got 2 specific periods where Ford PE got to a nice level. That's what investment is sometimes. To beat the market, you've got to be patient. Temperament is the key here. And I just want to reiterate that because I know it's not easy out there right now if you're not in some of these runs or you're looking at profit thinking, how dumb am I? Or you've taken a loss on a short and you're thinking, what the hell am I doing? Yeah, all of these things go through our minds. It's all about the selection. And that's why I've really been trying to go hard on this concept of, yes, metals, yes, energy. They've been the weak ones. Gold, obviously, showing the weakness. They've been the better markets to short. Unfortunately, shorting things like semis and tech will get in problems. I know everyone loves tech. Tech is not always the best place to look for, though, when you're talking about going short or long. At the moment, of course, long would have been the better click. Let's have a look at the last 24 hours. Semis, technology, communications, consumer discretionary, they were the best. The usual suspects, in fact, a lot of defensives doing the worst over the last 24 hours. That's not usually the rotational switch that you see before the market goes down. But, TD10, it's just something to keep in mind. But we will be looking very, very clearly at rotation now. We need to see that. Otherwise, these are out. Still, the best performer over the last 5 days has been regional banks, followed by semiconductors that broke out massively. One that we were looking at, MU, and semiconductors in general, they were breaching pretty hard over the last 24 hours. So it's pretty interesting to see all of that. But again, the tale of 2 things. Look at metals, look at energy. They're barely up through those sessions, even though the market has run through, and gold itself's down actually 5 over the period. It was so hot about 2 or 3 weeks ago, and now it's just become, the worst. So things can change very, very, very quickly. So just before we jump into the hottest charts and the key levels you need to be watching right now throughout the markets, I'd like to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're from Australia, you might want to listen to this. If you're from somewhere else in the world, don't worry, there's a bunch of special offers down below. But we've managed to secure some additional Microsoft fractional shares if you fund your account with as little as 1 cent here. and as much as $1,500 over the first 7 days of deposit, and you get some additional US $30 worth of Microsoft stock.